and let's bring over TradingView, because what I want to do now is go through each of those sort of bits of software, if you like. Again, we've got quite a lot. So what I'm going to do is going to go through them one by one and explain what the strategy is for and what type of market condition it's for. Okay. And again, they're on different time frames and all that sort of stuff. So just bear with me. So first of all, I'm going to go top left. Okay. So on the top left, I've got the range breakout. And it's on euro US dollar right now because we've done gold, we've done copper. So now I'm doing a Forex pair. Okay. I'm just going to take that off because you don't need that. Okay. So on here, I have the bias depth heat map because it's a tool that I need on every single chart because it's my confirmation tool. Okay. And I've got the opening ranges. So I've got the London opening range here. What have I got that setting on? Day trading. That's good. Okay. And then I've got the New York gold pit open there. So what it does is defines that range. When we get that first open and we're looking for a move out of that range. And as you can see here, we had the London open at 03 EST. One thing that the range is colored in green. Okay. So that means we're only looking for long trades. Confirmations 3 out of 3. I'd like more, but again, it depends. I don't know how euro US dollar behaves. So I need to back test this and understand that actually 3 out of 3 on a breakout, the London Open is what I need. Or is it 5 out of 6? Is it, we need to understand that. And it's all about the back testing. We get the New York gold pit open here, but we get the reversal down here. So there was no trade. So really, this defines the day. This is changeable. So we can change that to oil. We can have the oil pit open at 9 a.m. EST. We can change it to gold. Again, you get the gold pit open, which is 2 a.m. EST, and New York gold pit open. You probably have the London open in there as well. So it defines that range. So it's a specific strategy for specific times of the day. Okay, and that's always my start point for an instrument. Okay, what's the opening range? Do I get an opening range breakout? Okay, in the London Open, there was a great one. Okay, when we start to go through Confluence, you'll see how I build in those other indicators to give me more sort of confidence in moves, if you like. But that's the range breakout. So for those that can only trade certain times of the day, this is brilliant because there's always a London Open, there's always a New York gold pit open, there's always a NYSE open, there's always an oil pit open. It's always at the same time of the day. It defines the range, gives you the bias for the range, and in this case, we're looking for the long. It came down below because it's got to trigger on the next candle. You don't take the trade, you walk away. That's the trade. Okay. Obviously, you're going to have your support and resistance zones there, and you get the confirmations and everything. But that's that particular the signal, if you like. So the next one is the VWAP Predator. So this relies on momentum. Okay, so I've got this on the 3-minute Heikin-Ashi for now. Okay, but what it does, it starts. So this is normal behavior here. So we're going into the nighttime, and then the Asian session here with euro US dollar, and it's pretty, it's traded, but not a lot. We start to get into the European pre-market and the European Open at 3 a.m. We start to gather momentum. Okay. Now we get our first buy signal at this point. Again, I don't know how US dollar behaves, but I'm just giving it as an example. There's 5 out of 6 on the confirmation. If we understand around that time of the day that 5 out of 6 is, when we've done the back testing, that's a good signal. We take that signal, we go long. Okay, we have a buy signal here with 6 out of 6, another buy signal here straight after, so we can start to add. Then it goes reasonably flat. One thing that we would suggest is we always follow these VWAP extensions for our trailing stop. So once we breach this top one, this next one down becomes our trailing stop position. Okay, so here we get in this signal, the VWAP is our stop. And then once it breaks through this next one, the next extension is our stop. So we're looking in profit here. But then look what happens pre-market of the US. We get another signal. We got all 6 out of 6 we add more contracts if you're trading futures, or more lots to the position here. And then the next one, we get another signal. So we add even more, and it keeps going and keeps going. Now we can see the manager ribbon in here. It turns red at this point. We take our profit. Okay, very, very good tool. It's a momentum trading tool. Okay, very, very important. So it looks at both price action and volume, also in respect to where we are with the VWAP and those VWAP extensions. So it's a really, really good tool for scalping and day trading. So that's the next one. The next one is the Slingshot. So the Slingshot does what it says on the tin. We have a slingshot type of environment. So I've gone a bit weird here. So this is a 30-second, but it's on the Renko ATR 14. But in reality, I just want to explain the actual strategy itself here, the signals. So we get a move up. We pull back. The Slingshot identifies those pullback zones and gives you signals. In this case, we've got a type 2 and a type 1 buy signal. It also gives you those target zones, but then a trailing stop. So you can see this is wherever it shows a trailing stop, it's a winner. Okay. Then we can see another one. So it's going pretty flat, but it does give you a pullback zone here. Type 2 buy, go. Target 1, target 2, target 3, and there's our trailing stop. Those trailing stops can be changed. And it's the same for sell signals. A type 3 is a trend failure. We get a little trade here, then it pulls back. Now it prints a pullback zone for a short. Type 2 sell, comes down, hits target 2. And the same here, type 2 sell. At this point, we can see it comes down and takes a trailing stop. Again, now we're changing momentum. It's coming up, it's pulling back, going up, it's pulling back. We get a type 1 buy, it goes. So that's the Slingshot. So this is really for something that's trending, pulls back, and then goes again. Okay, so that's a different type of strategy for a different type of behavior. Okay, the harmonics next is for me. So you'll see this on the daily time frame. So this is Euro US dollar on the daily time frame. It automatically spots this bat pattern. It's labeled it a bat, and it's completed in the automated completion zone. You see these two levels here. So for me, I don't trade this, but I understand on a daily time frame or on an hourly or something like that, on the instrument that I'm trading, is that this has met so many rules. The likelihood is it's going to go up. So if I'm day trading, now what I'm really looking for is the longs. Okay, they'll be confirmed if I'm using, if I'm on, for example, I'm on, I've got the trading buddy on Ninja Trader, my correlations were the right way, but really the long trades, you see these fib target points here, hits 100% fib and comes back down again. So these are, having this on your chart it's a strong potential. I mean, you can have it on different time frames, but for me, I want to understand that sort of that overall view, and to be honest, it's part of my operational landscape, if you like, because yes, it doesn't happen very often, but when they do, this is a short look. Another bat pattern completes in the automated completion zone, comes down to the 127, pulls back up. Where does it find resistance? At the D pivot and the bottom of that zone, and then goes again. That gives you an idea of where during these days where you should be going short on euro or US dollar only. So again, it's something I don't trade. It is a signal, and people can trade that signal, and whether it's on a 3-minute or a daily. But for me, I personally use it as part of my operational landscape, so I can have an understanding of what's going on sort of longer term for me. So I'm confident in those shorts or those longs, depending on where we're going. Okay, and you'll see I've got the buy steps heat map on all of those as well. So roller coaster now. So roller coaster basically is the roller coaster motion. Okay, so we'll get, sometimes we get into these small sort of moves where we're in these big sort of between zones and everything like that. So you'll see, here, wherever you see these trailing stops printed, these are all winners. Okay. So, from 11 a.m. this day on the 12th of December, we've got a short, that's a trailing stop. It's a winner. Okay. We've got another short here, trailing stop winner. Long is a loser. Okay. There's no 100% here. Then we roller coaster, long, short, winner, winner, long, loser, long, loser. We get a short winner, then we get a really big long. Okay, that does happen. No signals here, and then we move along in the day, and we can see again we're in that roller coaster motion, and that's how that's what the roller coaster is for. So roller coaster works very well when you get a lot of volatility, because you get a lot of up and down movements like a roller coaster. And you know, this week when inflation data came out, the roller coaster was very strong on gold. Okay, so that's the roller coaster, a different type of behavior, different strategy. Then we have the xBrat algo. So what this does is gives you grades of a trade. So for example, here, for example, we've got a 4, a 5, and a 6-star buy. So as momentum's building, as the train is gathering momentum, leaving that station. So as retail traders, we cannot move that steam train away from the platform, if you like. Volume needs to be coming in. That is given really by those institutional traders, but we start to understand as that momentum builds. So if we want to be early into trading, we get a 4-star, and we've actually got we've got confirmation underneath, which we haven't got at this point, so I wouldn't take it, especially if we've got this pivot up here. And then we get the 5-star. I'm more inclined then to take the 5-star, okay, because we're 5 out of 6. Then we get a 6-star. You see the momentum building, and it really just go for it here. I've got the manager on here as well, so we can see we've got these dots up above, so that's higher than average volume, and the dots down below are lower than average volume. And then we can see shorts is exactly the same. 5-star sell, we're 5 out of 6. 6-star sell, we're 6 out of 6. Okay, when you can use the manager to manage those trades. Again, the same here. 5, 6-star sell. Okay, stop's going to be above this pivot. Take the short, doesn't take the stop out. We understand with the manager on this pullback here, we've got higher than average volume, but it runs out of juice and then starts to come back down again. The manager ribbon still stays red. We're going to stay in this trade. Okay, so that is the xBrat algo. Okay, so now we're on Elliott Wave. Okay, so I'm on a 30-minute time frame here, and so no chart should look pretty. Okay, I wish it did. And some of these people that sell these really weird Elliott waves and MT4 and stuff, they all look pretty, but there's no pretty chart. A wave, it identifies wave 1, a wave 2, a wave 3, then identifies the pullback zone for the wave 4. We've got so coming down on the wave 3, we've got a false breakout stochastic down here. What happens on that? That shows really strong bearish momentum. So when the stochastic pulls back on there, it's like elastic band. And if that's doing that at the same time as pulling into one of these pullback zones for a wave 4, the likelihood is it's going to go down and hit that automated target zone for the wave 5, and you can see how strong that support, it is support, but actually it's just our target zone for the 5th wave. We start printing that, and it adjusts here until we get the wave 4. We also teach people how to look at the Elliott Wave oscillator and measure that for that behavior to make sure the wave 4 has behaved. Lots of ticks in the box, trade the short. Okay, and that's how we use for Elliott Wave. Elliott Wave, when we close for Euro US dollar on Friday, is we've had the 1, the 2, the 3, the 4. I wouldn't, we've gone from false breakout, strong sell to strong buy. We didn't cross over in the oversold zone, so that wouldn't be a long trade for me. But there's lots of rules, and we've got all of those in the training. And then finally, I've got another chart here. So this is not signals. This is just showing the buy step Heatmap in there, and the manager that we, really, really important, the manager, because it stops us from getting out of trades too early. So for example, say we've got a signal coming down here and we're going flat at this point here. There is no sign on the manager with volume here that we're going to get out of this trade, because this is a higher than average volume doji. This is a higher than average volume down candle. Then we get a cyan candle, which is down but it has less volume than the previous candle, even though it's higher than the other. Again, there's training for this, and it becomes very simple to do. But we do get a green candle here with higher than average volume. So all we do is put our trailing stop above the previous pivot there. If it takes us out, we're locking in, we take the profit. It doesn't, it turns around, it comes back down again. All of these moves up here, see, higher than average volume, but it's a doji, it's indecision. It pulls down again, okay? Now at this point, we start to move away from there. And I would say this is a real strong support resistance zone, okay? If we were to look at, if we look left, we can see some really strong support and resistance here. These pivots here and here, you know, if I've got those support and resistance zones drawn on my chart, I'd be taking profit when it hits those zones, okay? And that's very important. That's why we have those support and resistance zones.